So Warren Buffett, the greatest investor of our generation, arguably the greatest investor of our lifetime, a man who has hundreds of investing quotes and of course offered some of the most priceless lessons that the world of investing has ever seen. In this video, I'm going to give you 3 of my favorite and most valuable lessons that my idol Warren Buffett has given me, and I feel that new investors and even experienced investors should be following these lessons very closely. Now, all I ask in return is that you sit back, smash that like button and enjoy and try and absorb as much of the wisdom from this great investor. Now, it is very important to understand, if you're watching this, Warren Buffett is not Cathie Wood. He is not 𝐂𝐈𝐒𝐂𝐂𝐒𝐒. He doesn't want 2,000% returns overnight with Bitcoin. He simply wants to buy good companies at great prices for a slight discount if possible, that have a good solid 10-year plan and you know what they're doing. That in essence is Warren Buffett's strategy. With this method of thinking, if a market does indeed crash or correct, these companies have good revenues, good track record, good cash flows, and they can come through the recession even stronger. And it should represent nothing more than a buying opportunity. He doesn't want to buy fast-growing companies, he just simply wants to buy good businesses. And that brings us on to lesson number 1. A couple of years ago in Switzerland, Warren Buffett was there, and of course, as always, he dropped some words of wisdom. And in this one, he talks about businesses that you can understand. He talks about buying a business that has a simple business model, a business that you can buy into and know what they're doing in 10 years. Let's have a little listen to what this man has to say, and then I'll unpack it for you.
We don't look for specific sectors. We do look for businesses that I can understand. Now, when I say understand, that means where I feel that I have a high degree of confidence in my ability to see what they're going to look like 5, 10, 20 years from now. It isn't that I don't understand, say, the software products in general of a Microsoft, but I don't know how that industry is going to develop over 10 or 20 years. I didn't know that Google was going to come along in terms of search or all kinds. So anything that's rapidly developing, that has lots of change embodied in it, by my definition, I won't understand. It may do wonders for society. It may have what appears to be a very bright future, but I don't bring anything to that game where I know, not only I don't know more than the other fellow, I don't know as much as the other fellow in evaluating what the industry will look like in 10 years. So the things I look at businesses that are reasonably easy to evaluate where their products, how they will fit into the economic picture, how their economics will look in a 5 or 10 or 20-year period. I mean, to take an extreme example, I can understand Nestle, it's obviously, and you can understand it, anybody that's had any experience in business can look at that company and figure out in a general way where it will be in 5 or 10 years. And we're looking, Nestle isn't going to be on the list, but we're looking for businesses like that are quite understandable. And but I don't go out and say I'm looking for the steel industry, or I'm looking for the, whatever, maybe office equipment industry or something of the sort.
So what he's saying here is, if you cannot clearly understand the business model, you can't see where this business is in 10 years time, then really do reconsider before you buy it. He mentions Google. 20 years ago, no one knew that search engines would be a thing, and of course the revenues are going to be as high as they are. He didn't understand it, therefore he didn't buy it. Of course, he missed out on Google in this scenario. But what he wants to do is he wants to buy good businesses where he can clearly see where they are in 10 years or even for the rest of his life. Let's look at it another way. If you say Coca-Cola, what are they going to be doing in 10 years time? It's pretty clear. Soft drinks, maybe even they venture into food, but they're not going to be opening gyms or putting cars into space. You know what their business model is. It's quite easy to understand. If you compare that to Tesla, and Warren Buffett is a good example of this, you see that Tesla is putting cars in space, it's making robo-taxi, it's putting solar panels on roofs, it's talking of partnerships with SpaceX and building runways under cities. There's a lot of legs to Tesla, and I think that this is why Warren doesn't really buy into this type of company, because there's too much to value. He wants a simple business model that's easy to understand, where you can project their future cash flow rather than just go on future projects. And I think that's one of the big lessons that he's giving here, is only buy, if you want to invest like Warren Buffett, companies you can clearly understand. But don't get it wrong. He's not saying you need to be a software engineer to buy Facebook. I think what he's saying is, if you understand that Facebook is a social media platform, it makes money from advertising, that should be enough. Now Facebook's moving into the meta universe, and I'm really interested to see eventually what Warren Buffett has to say about that. But I think that's the gist of what he's trying to say here. And that brings us on to lesson number 2. Lesson number 2 is, if you sign up via eToro on that pinned comment, deposit, make a trade, then you get lifetime access to me and Warren Buffett in the chat room. Now, I can't confirm Warren Buffett will ever be in the chat room, but nonetheless, if you want to get lifetime access, go and sign up via that link on the pinned comment. But seriously, lesson number 2, the greatest lesson Warren Buffett has ever given, in my personal opinion, is this. And this lesson is super simple, and it's something I have really tried to focus down on myself. And that is, evaluate a company and get a value for the business before you look at the price, the chart, the news, or anything of the sort. Just listen to what he had to say on PetroChina, and I'll unpack it for you after this clip.
What's your advice about that? You can't constantly sit there and wait and say, oh, it's going to go higher, it's going to go higher.
We don't even think about that. What we think about is, how much is it selling for? How much do we think it's worth? When we bought it at $35 billion effectively, I felt the company was probably worth at least $100 billion.
How did it come to your attention? How do you find a stock like PetroChina?
I sit there in my office and I read an annual report, which fortunately was in English, and it described a very good company. And told about the oil reserves, told about the refining, told about the chemicals, everything else. And I sat there and read it, and I thought to myself, this company is worth about $100 billion. Now, I didn't look at the price first. I look at the business first and try and figure out what it's worth, because if I look at the price first, I'll get influenced by that. So I look at the company first. I try to value it, and then I look at the price, and if the price is way less than what I've just valued it at, I'm going to buy it.
So in short, what he's saying here is, don't make any assumptions on a business. Don't listen to what YouTubers are saying. Don't listen to the news. Don't listen to the stock price, because if you see a stock that's fell 50%, it's going to feel like it's discount. As humans, we have a bias. And this brings me on to Warren Buffett, in my opinion, the greatest quote of investing in history. What the human being is great at doing is interpreting all new information so that their prior conclusions remain intact. So for example, if you read that a company is making flying cars, robo-taxis, it's going to train dolphins to clean up the oceans, and it's going to find alien life out on Mars, then that's a lot of hype to believe in. And of course, you'd want to buy into that company no matter what the price, because the prospects are absolutely beautiful, and you want to tell everybody you were in on the ground floor. Simply put, we as humans have a bias. What Warren is saying here is, find out the value of the company before you look at anything. Then it will give you a fair value estimate, and you as a human will be less biased when it looks to buying into any stock, any company, any business, or anything of the sort. In Warren's eyes, the stock price, the chart, the news, or anything of the sort is nothing more than a distraction, and all you need is simply the financials, especially at the first stage of finding an investment. And lesson number 3 is something that I think is very relevant at the recording of this video. We've got a market in the beginning of December, recorded December the 1st for anybody who's watching, that is starting to look a little bit heavy. People are getting a little bit scared, and the market's starting to fall. Warren Buffett has some very good quotes in this sort of market, but one of them that I love is, the best chance to deploy capital is when things are going down. Now, don't make a mistake by this, because it doesn't mean continue buying into your losing stocks, because what he's saying here is, provided you've picked the right stock in the first place, the business is solid, the cash flows are good, the safety of the company's good, they're not diluting you, and so on and so forth, then it should be nothing more than a buying opportunity if you're a long-term value investor. What he's not saying is double down on something like Nikola or Palantir, or something that isn't at the stage where it's definitely 100% going to be around in 10 years. He says that when the market is going down, everyone is fearful, and instead of looking for new opportunities, they panic sell their investments. Buffett believes that market downturns are the best time to look for good companies. He's also previously said that this is good advice for passive investors. Market downturns are a good time to invest your money into diversified portfolios of ETFs. And why is this? Well, simply put, the diversified ETF is actually going to be cheaper, and if you continue investing in a downtrending market, eventually the market will recover and your average will be much better. So in the long run, again, provided you pick the right ETF, you should be a lot richer for it. And this brings us on to the biggest quote, in my opinion, Warren Buffett's history, which is also part of lesson 3. And that quote is, "I will tell you how to become rich. Close the doors. Be fearful when others are greedy, and be greedy when people are fearful." An absolute thrilling quote. And the reason why I feel this is the most famous quote from Warren Buffett is, when people are panicking out of any industry, any asset, or anything in general, usually that's when the best value is there to be made, provided you're picking the right bloody company. For example, if you look at property investors, the best time in the last 30 years to buy property was during the 2008 mortgage crash. Properties went through the floor. If you picked up properties in that market knowing that people still need places to live in the future, you have done extremely well. If you bought it at the top of the crisis in 2006, 2007, before it even started, when people thought property couldn't fail, it's too big to fail, the bonds can't fail, all this other stuff, people were being greedy, and that's when you should be fearful. That's the point he's making here, and I can't agree more with it. Now, I did say there'd only be 3 lessons here, but I slightly lied. There's sort of a bonus 4th lesson for everybody who made it this far. If you could go down the comments right now and drop down the code word, which is Uncle Warren, it would greatly help me out. And let's go on to the 4th lesson. Something that has changed slightly in terms of a quote, but I feel it's one of the most important lessons out there right now. Warren Buffett has famously once said, "Wall Street is the only place where people ride in on a Rolls Royce to get advice from someone who took the subway." And what Warren means by this is the billionaires of the world, people who are already established and wealthy, are going into companies like BlackRock or JP Morgan to get investment advice from an advisor that most probably came in on a subway. Then they get back into their chauffeur-driven Rolls Royce to drive home. It's a bit crazy to think like that, because if you were a good investor yourself working for JP Morgan, you could go ahead, leave, do it for yourself, and get your own bloody Rolls Royce. But nowadays, it is slightly different. What we have now is we have you in the Rolls Royce because you're the investor, listening to somebody who's not necessarily on a subway, but they've got 1 million subscribers, or they're Susan from down the local pub, or they know about insider trading, or they even know that Bitcoin's going to go to the moon. The problem is people are easily influenced, and that is what Warren Buffett is saying by this quote. So even though it is counterintuitive because you're watching my YouTube channel, don't listen to me. Don't listen to anybody else. Go and follow the simple steps from this video and you should be just fine. If you want to invest like Uncle Warren, follow the simple steps. Buy a business that you understand, not because somebody told you how it works. Step number 2 would be value that business at an independent rate. Don't listen to a YouTuber or any outside noise or influence in terms of news, stock price, or anything of the sort. Read the balance sheet and see if this company is worth an investment. Step number 3 would be buy when this stock is downtrending, providing the metrics are still logical sense. The opposite of what most YouTubers are doing right now in pumping up stocks, and people keep buying as the stock goes higher and higher and higher. Step number 4, very simple, be fearful when people are greedy, and I'll let you make your own assumptions on that one. And step number 5, do not take advice from anybody who is pushing an agenda of any sort, whether that means buying a stock, selling a stock, or anything of the sort. Make your own investment assumptions, and after that, you're either going to do one of 2 things: become successful or learn a valuable lesson. Either way, it will enhance your investing journey. So I hope that helps somebody. I hope somebody is still watching. Don't forget the code word Uncle Warren down below. If you want to join our chat room, there's a link for the Discord down in the description. And if you want to see how I value stocks, check out that video up there. It's on value investing and what I look for on the balance sheet. Take care. I'll see you in the next one. All the best. Peace.